Hi and welcome to TCM Education and another video in which we recap the best trades from our power list from Friday, June 27th. Now we're doing this routine again and again because this is the job of a day trader, to do the same thing again and again, and that's how you improve, doing the same thing again and again, and adding always new nuances, and being more daring, and basically being more professional at what you're doing, and of course taking your business to profitability, and if you're doing the right things, maybe to great profitability. So we're not going to talk about personal profitability, but we're going to talk about the concept, and the concept is trade very liquid stocks, in our case above 5 million. Trade stocks above $10, and trade stocks that have very specific requirement is that the range percentage will be more than 10% from the highs to the lows. That's very important because that means that the stock evolves during the trading day. It doesn't include the gap, which we can deal with that with other lists, but we want to see a stock that has great intraday range. That's super important because this is how you make the money. If the stock gaps down 20% and then moves sideways all day, how are you going to trade it? So a gap down or gap up or gap down not necessarily are the best indicators. This is the best indicator alongside volume, range percentage, and volume. When I say volume, increased volume versus the average, that something great or very bad is happening. If something bad is happening, we're ready for to short. If something great is happening, we're ready to buy. So we're ready for both sides of the market. That's what we like, a stock that trades both sides of the market, not necessarily one side, although you never know. I mean, sometimes you think there are shorts available, they aren't, but longs are available at all times. Okay, so let's go to this list. I prepared already one trade just to save time, because time is of essence, like I said, and I apologize for that. Each video must be up to 14 minutes because we have a 15-minute threshold imposed by YouTube. Why? Because we are a new channel, blah blah blah. They won't allow us either to go live. That's why we are not going live yet, and of course we are limited with how long the videos can be. We'll deal with that. Okay, so I'm not going to go to circle, and obviously there are plenty of great movers in this list. Let's go to more let's say up to everybody. Everybody can trade this pattern if you know what you're doing. And if you remember, we discussed HSAI prior on Thursday because the stock closed up with a huge gain. I don't remember if it was 15% or whatever it was. Okay, you can check. Actually, let's check the daily, year to date, and you can see. Let's throw away the VWAP, and you can see the huge bar where it closed at the highs. Now the expectations are when the stock is closing at the highs, and again, we are day traders. We're closing the position. That's our business, to close the position. Now, if you're a swing trader, that's what you want to see. You see a momentum stock that closes at the highs. You see all-time highs at $24, and you hope. Well, it didn't. It wasn't meant to be. So back to our 3-minute chart. Let's add back the VWAP and refresh it. So that's super. I don't know if it was downgraded. What happened here? Maybe profit taking in the pre-market. It's a Chinese stock. Anyway, it doesn't matter what happened. What matters is that the stock opened with a huge gap and dropped like a stone in the first 6 minutes, and then started to recover. And then you think to yourself, is this a short or is it a long? Obviously, you by 10:30 you don't know. By 11, maybe you know. Obviously, by the end of the day, you know that you needed to buy the stock eventually, and it moved up basically 6 out of 6.5 hours. So other than the first two bars, base and a pullback from the from a move higher, the stock is higher. It has higher lows almost constantly. So it's clearly a long play. Now, where is the entry point? I'm pointing to one entry point. Why? Because I'm using the VWAP, I'm using the round number 2050 and 2070 as the entry, which is the 1% that we are coveting of risk. And when you trade under this limitation, don't lose more than 1%. You immediately know how to act. You can buy a $20,000 position, which is 1,000 shares, and your risk is $200. Or you're gonna buy a $5,000 position, which is, I don't know, 250 shares, and the risk will be $25. So again, you decide how much you risk, and if you stick to the plan, the stock ends up at 22, so you risk 10 cents and the reward is $1.30. Is it reasonable? Yes, it is. Of course it's reasonable. The stock worked for 4 hours, from 11 to, sorry, nearly 5 hours. The stock worked for 5 hours. You didn't do anything stupid to interfere. Actually, there was an amazing entry point adding at 21.38, risking 5 cents. If you added here at 21.38, let me draw it again on the chart. That's a smart move. And okay, let's draw it. Let's draw it in green. I don't know why I can't do it. Okay. Okay, here it is. Green. And this is a very low risk trade you can add, but I don't want to emphasize and go overboard, because you can add, you can take partials, you can do whatever you want, and the idea here is to get this video done in 15 minutes, less than 14 minutes, because I don't want to go overboard and the video won't upload if I'll close it above 15 minutes and 1 second. So we need to keep it keep it very tight. So again, there are so many options. Each of you as a day trader is responsible for your own action, and I'm just giving here an example where out of this list, okay, and I don't know when the stock entered the list, okay, most likely at the open, and it stayed there. But let's say it entered the list later, it was still in another list because it gapped down so much. Having said that, again, it's possible that you're not watching HSAI. That's perfect. Okay, there are so many other trading opportunities in the Nasdaq and the New York Stock Exchange. I just pointed to a random stock that had the qualities and the attributes that we want from our daily power list, which are very, very aggressive, meaning above 5 million shares, range over 10%, range percentage over 10%. So that's why out of thousands of stocks, by the end of the day, there are only 18 stocks on the list. Only 18. In the middle of the day, there were 5 or 6. Okay, I remember a couple of them. So that's the risk reward eventually in this trade, and this trade fit to perfection, great liquidity, closed at the highs of the day. So you could have, if you like this strategy, you close it at 358, and you have a winner of $1.20. And if you bought 500 shares, that's I don't know, $600, I think. And if you bought 100 shares, that's $120 and so forth. And if you bought 2,000 shares, I'm not going to do the math. Okay, it's clear that I'm not suggesting you buy 20,000 shares. Okay, I don't care how many shares. Nobody cares in this market how many shares you buy. Okay, because the liquidity is astronomical versus other markets, not to mention stocks that don't move and don't have anything going for them. But again, we're not building our business on one stock. We are working basically 6.5 hours or 6 hours out of 6.5, maybe half an hour in the pre-market, and taking a half an hour a break or 15-minute break, whatever. It's not such a hard work that you need to take so many breaks. Okay, the point being is that this is one trade out of many. Okay, and this one did very well. Now let's say it loses. So it loses 1% of your position. So if your position is $20,000, then you lose $200. If you're not prepared to lose $200, you lower your position to $10,000 and you lose $100, and so forth. You can buy 5,000 shares and then you lose 1%. That's $50. Now below that, I don't think there's any reason for you to day trade. So that's the idea here. Okay, to take trades that are either very, very comfortable in terms of risk reward, and you control only the risk, you don't control the reward. The market controls the reward, sometimes the reward is amazing, and if the reward is amazing, that's the motivation to continue with this program, with this strategy. Now the strategy doesn't fit all stocks at all times, it's obviously clear, so you can alternate and use maybe other strategies on top of this strategy. I suggest focusing on this strategy because first of all, you can repeat it and scale it very easy. Okay, it's scalable and it's easy to implement, and you don't have to go in and out, you don't have to pay a lot of commissions, and I know that's very important for traders outside of the United States that pay commissions. In the US you don't pay commissions, but still getting in and out is not very effective. If you pick the right stock, that's what it's the most important thing, and obviously more important than that, the right entry. Is this entry that I'm pointing here the best entry? Of course it's not, but it's a reasonable entry, assuming you watch the charts, and I think I showed in previous videos how my charts are looking, and this is I'm using two large screen Samsung 29-inch screens. On each of those Samsungs I have 6 stocks that I'm watching, so altogether 12 stocks. Okay, can I miss trades? Obviously, I'm missing trades all the time. Sometimes I won't miss a trade. I mean, if you look at CRCL yesterday, you can look at it here in the room. Take a look at this consolidation. Can you miss it? This consolidation at a round number? Of course you cannot miss it. There are other trades that you're gonna miss. Okay, guys, we're kind of reaching our threshold for 14 minutes on this video. Please remember we do have a seminar over this weekend, tomorrow at 1 p.m. If you want to participate, please email us and we'll send you a link to the Zoom meeting. If you don't want to participate, please like and more important, share this video with your trading friends, and we'll see you in our next video. Thank you.